If you own a home in Ohio, you already know this feeling. You open your property tax bill, you look at the number, and your stomach just drops. How did it get up this month? My income didn't go up like that. My house didn't grow an extra bedroom or bathroom. Now, here's the twist that no one is really explaining. Ohio lawmakers just passed 4 major property tax reform bills, and depending on how this plays out, your bill on a $400,000 home could look very different 3 years from now. In this video, I'm going to break down each of the 4 bills in plain English, show you the real dollar impact on a $400,000 home that currently pays $5,454 a year. At the end, I'll let you know one simple step every homeowner can take this month so you can actually have a voice in how all this shakes out. And that's the way that it's supposed to be. So, do me a favor, stay with me, because the way these numbers hit your family's budget might surprise you, and there's a lot of them, so be ready, pay attention. I'm Brian Comer with Berkshire Hathaway Home Services. So, let's unpack what just happened very quickly. Here's the big picture. The Ohio General Assembly just passed 4 property tax reform bills. Here they are. House Bill 129, House Bill 186, House Bill 309, and House Bill 335. They're being described as some of the most significant property tax changes in decades. Together, they aim to limit how fast your tax bill can grow, cap some of the automatic increases you and I never voted on, and give county officials new tool to dial levies down when they collect more than needed. I'd love to see if that ever plays out. But there's a phrase I want you to remember. Listen, the twist or the devil is in the details. Because each bill works differently and they don't all save you money in the same way. Here's the game plan today. I'll explain each bill in simple, let's call it homeowner language. I'll show you a side-by-side financial impact of the $4,000 home, and then I'll give you a clear call to action so your voice is heard before the changes fully take effect. All right, let's start with the one that hits the school levies first. It's called House Bill 186, Capping School Tax Spikes. Think of House Bill 186 as stop the school tax roller coaster bill, okay? Sounds like my sales numbers, up 1 month, down the next, up 1 month, down the next. You know what I mean if you're in sales. Right now, if you live in a school district on what's called the 20 mil floor, there's a minimum property tax rate schools are guaranteed to collect. When your home value jumps, your school portion of the tax bill can jump right along with it, even if you haven't voted for a new levy. Sounds fair, doesn't it? Not really. House Bill 186 says this: if your district is on that 20 mil floor, the school part of your tax bill can only grow at about the rate of inflation, not the full pace of your property values. It does that by giving homeowners in those districts a tax credit whenever the 20 mil floor would push collections above inflation. What does that mean for families? Well, when values jump up 20 or 30% at reappraisal, your school taxes aren't allowed to jump 20 or 30% with them. The extra amount above inflation gets kicked off your bill as a credit. That's especially important for retirees, widows, and fixed income houses who want to stay in their homes even as the values of those homes rise around them. There is a trade-off. The state has to send more money back to the schools to keep them whole when your local taxes are capped. That's hundreds of $millions in state aid over time. And some school officials worry about long-term funding pressure if inflation stays low, but values keep climbing. But from a homeowner's perspective, House Bill 186 basically says this: tie my school tax increases to inflation, not to wild swings in my home's value. And remember, the twist or the devil is in the details. We'll see what that looks like in real dollars in just a few minutes. All right, let's now talk about House Bill 335, capping inside millage. So, this one goes after something called inside millage. Inside millage is the first 10 mils of property tax that local governments can charge without a direct vote of the people. Shake my head. Think of it as the baked-in part of your tax bill. Here's the problem. Inside millage is not subject to normal reduction factors that protect you when values rise. So when your value jumps, this part of your tax bill can do what? Climb automatically, even though you never voted for it. House Bill 335 says this: we're going to limit revenue increases from inside millage when values jump. That growth gets tied to inflation, not to the full surge in market values. Okay, that was complicated, right? Let's break it down easy. What does this mean for families? It puts a ceiling on how much the non-voted part of your tax bill can grow. That change applies statewide, not just in districts on the 20 mil floor. Reform groups estimate this piece alone could save homeowners hundreds of millions of dollars over the next few years as reappraisals hit. The trade-off is this: limiting automatic growth from inside millage also slows down revenue growth for schools and local governments, unless, guess what? They go back to the voters, you and I, for new levies. Homeowners see it as stop unvoted tax spikes. Some local officials see it as we'll have to go to the ballot more often. And once again, the twist is in the details, especially how much of your own bill is inside millage versus voted on tax levies. All right, let's now talk about House Bill 129, fixing the tax school formula. This one is less about capping growth and more about how we count school levies towards the 20 mil floor. Under current law, some levies, like emergency and substitute levies, even though they fund day-to-day operations, don't fully count toward the 20 mil floor calculation. That can keep more districts stuck on the floor and make it harder for normal reduction factors to kick in and lower your rate when values rise. Again, very complicated, isn't it? Let's make this simple. House Bill 129 changes that. It includes more fixed sum levies like emergency and substitute levies in the 20 mil floor calculation. Robbing from Peter to pay Paul, maybe. What does this mean for families? In districts with lots of these levies, House Bill 129 can push them off the 20 mil floor, which gives them more room for tax reduction factors to do their job. That means slower growth in your school tax bill when values jump. And there is a trade-off here too. School groups point out that the changes to how emergency and substitute levies are treated, especially with limits on renewing them after 2026, could make funding more complicated and potentially more expensive to replace in the future. So, House Bill 129 is the formula cleanup bill. It doesn't stop increases outright, but it eases off the gas pedal a little bit on school tax growth in many districts. And yes, guess what? The twist is in the details of your specific school district's levy mix. All right. Now, you guys are probably going, holy mackerel, guy, what is going on here? Let's now talk about the fourth one. House Bill 309, the county tax cut button. Finally, there's a House Bill 309. If the other bills are about formulas and caps, House Bill 309 is about power. It gives your county budget commission, usually the auditor, the treasurer, and in some cases the prosecutor, more authority to reduce tax levies, listen to this, if they are collecting more than is reasonably needed for their intended purpose. Think of it as a tax cut button your county can push. House Bill 309 allows them to look at a levy that's pulling in way more money than expected because property values have jumped and say, this is unnecessary or excessive, and dial back those rates. Man, would that be a great thing. There are guardrails, so they can't cut schools below the 20 mil floor or below certain required levels. So let's summarize this up. What does this mean for families? If your county is fortunate enough to use this tool, you could see actual rate cuts on your bill without a new election. It respects the original purpose of the levies while keeping them from becoming a quiet cash machine when values skyrocket. The trade-off is clear, right? Supporters see it as taxpayer protection. Critics worry that giving too much power to local officials to override what voters originally approved. Now, I don't know about you, but if they're going to lower my tax bills without my approval, I think I'm for that. What about you? So for House Bill 309, the twist really is this. Will your county budget commission actually use this power or just leave it on the shelf? We'll talk about how to influence that at the end. All right, now that we've taken a brief course on the four bills, let's talk a little bit about the financial impact. Remember, I said we're going to look at this as if all of these proposals were imposed on a home sitting in Franklin County that's valued at $400,000. Okay? So I'm going to walk you through a simple example for a $400,000 home in Ohio that currently pays about $5,454 per year in property taxes. Then we're going to compare that to each of the different new proposals. Remember, these are illustrations, not predictions of your exact tax bill. Your real numbers are going to depend on your county, your school district, and your levies. But this will show you the shape of the change. So here's our baseline with no reform. Your current bill is $5,454. After a big reappraisal, your taxes jump 12% in year one. They grow about 5% per year in years 2 and 3. So that takes you about to $6,108 in year one, about $6,414 in year 2, and roughly $6,795 in year 3. So with no reform, remember, no reform, you're paying about $1,281 more per year by year 3 on the same $400,000 home. Doesn't seem fair, does it? Now, are you ready for this? Let's lay out each bill on top of the same example. House Bill 186. Again, let's call it the capped school tax inflation bill. For House Bill 186, we'll assume 60% of your bill is school taxes. That's a pretty fair number. I've used as high as 66, or 2/3 of every dollar goes to the schools, but let's use 60%. And that portion is capped at 3% inflation instead of jumping the full 12, 5, and 5%. The other 40% still allow the normal increases. That gives us this. Year 1, about $5,814. Year 2, about $6,037. And year 3, about $6,270. Compared to no reform, that means you save about $294 in year 1, about $337 in year 2, and roughly $1,100 in savings on this home over 3 years. All right, now let's change our tune to House Bill 335. This is what I call the cap the inside inflation. So for House Bill 335, we'll assume 25% of your bill is inside millage, and that portion is tied to 3% inflation, while the remaining 75% grows at normal. Now the numbers look like this. Year 1, about $5,986. Year 2, about $6,257. Year 3, about $6,541. Compared to no reform, you save about $122 in year 1, about $157 in year 2, and about $194 in year 3. That's roughly $475 in savings over 3 years. To me, that doesn't sound very impressive. What about you? Let me know your thoughts down below. All right, now that we got that one out of the way, let's turn our direction to House Bill 125, the formula fix. For House Bill 129, we'll assume the school portion grows a bit slower instead of at full speed. So the school share grows, let's say 7% in year 1, then 4% in years 2 and 3, while the non-school share still follows 12, 5, and 5%, like we talked about in the no reform aspect. That puts you at around $5,945 in year 1, around $6,207 in year 2, and around $6,481 in year 3. Compared to no reform, you save about $163 in year 1, about $107 in year 2, and about $254 in year 3. That's roughly $600 in savings over the 3 years. Again, we really appreciate the $600, but $600 over 3 years, a lot of work to save $600 over 3 years. My opinion. All right, let's go to our last one. House Bill 309. This is what we call the county tax cut button. Now, for House Bill 309, remember, this one depends heavily on whether your county budget commission decides to act. Big factor. For this example, we'll assume year 1 is the same as the baseline, about $6,108. In year 2, your county uses its new power and trims 5% off the total. Year 3 grows 5% from that lower year 2 amount. That gives you about $6,093 in year 2 instead of $6,414, and about $6,398 in year 3 instead of $6,795. Savings look like this: about $320 in year 1, about $337 in year 3. So roughly about $650 in savings over the 3 years. That's a modest 5% trim. All right, now let's do the side-by-side comparison. Let's pull all 4 bills next to each other for the same $400,000 home. By year 3, your annual tax bill looks like this with no reform: about $6,735. With House Bill 186, about $6,270, roughly $1,100 saved over the 3 years. By far the most impactful of the 4 bills. With House Bill 335, about $6,541, roughly $475 saved. With House Bill 129, about $6,481, roughly $600 saved. With House Bill 309, in our example, about $6,308, roughly $650 saved. Those numbers are crazy. Again, these are illustrations, not projections or guarantees. Your real savings will depend on your local mix of levies, inside millage, and whether your county actually uses the power that House Bill 309 gives them. But even with conservative assumptions, we'll start taking hundreds of dollars per family, and in some cases over $1,000 over 3 years on a typical home. And that's why the twist is in the details. What this really means. So let's address that. At a high level, these reforms are trying to fix a big problem. For years, property taxes in many parts of Ohio have been rising faster than people's incomes, especially after big reappraisals. These 4 bills limit unvoted spikes from the 20 mil floor and from inside millage, create more room for tax reduction factors, and gives counties a tool to cut back over collecting levies. For homeowners, the upside is clear: more predictable tax bills, less sticker shock after reappraisals, and a better chance to stay in your home even when your neighborhood's values jump. For schools and local governments, there are real concerns: slower growth in tax revenue, more reliance on state funding, and possibly, I don't think this is a bad thing, more trips to the ballot box to ask voters directly for new levies. Here's how I think about it. These bills are trying to rebalance powers away from automatic invisible increases and back to voter decisions and transparent policy choices. You might love that. You might have mixed feelings. If you're worried about your local schools, and that's exactly why your voice matters right now. Listen, if you've watched this far, number 1, thanks. You're already ahead of 90% of the Ohio homeowners who just see a number on their tax bill and feel helpless. What are we going to do? Here's my simple call to action. Step 1, know the bill numbers. Take a screenshot of this or write it down. House Bill 129, House Bill 186, House Bill 309, House Bill 335. These aren't just random numbers. They're the tools that could reshape your property tax bill for years to come. Step 2, look at your own tax bill. Pull out your last tax statement or log on to the county auditor's website. Believe me, all your tax information is there. I use it frequently. Ask yourself these questions. Am I in a district that might be on the 20 mil floor? Have my taxes jumped more than my income in the past few years? Would caps tied to inflation help my family stay more comfortably in this home? If the answer is yes to any of that, these bills are not abstract policy, they're personal. Step 3, talk to your lawmakers, not just Facebook. I'm not here to tell you exactly what bill you should support. What I'm asking is this: reach out directly to your state representative, your state senator, and say in your own words, I'm a homeowner from your district. Property taxes are hitting our family budget hard. Here's what I'd like about House Bills 129, 186, 309, and 335, and here's what I'm worried about. You can absolutely say this. And I support capping unvoted tax spikes, but I also care about stable school funding. That kind of specific balanced feedback is what they almost never get from a social media comment. Those comments are designed, for the most part to get clicks and elicit responses. Step 4, stay informed. I'll be tracking what happened as these bills are implemented and as the details roll out. So if you want clear, homeowner-friendly updates on Ohio property taxes and help understanding what this means for the value of your home and your next move, here's what to do. Hit the like button so this video reaches more Ohio homeowners. Subscribe to my channel. You've seen me do that before. It does help. And share this video with at least one neighbor, friend, or family member who's complained about their last tax bill. The more informed we are, the better chance we have of getting real, balanced property tax relief that protects both homeowners and our schools. I'm Brian Comer, a Central Ohio realtor who cares a lot more than just about buying and selling houses. I care about what it costs you to keep the house you already own. If you've got questions about how these changes might impact your specific situation, whether you're thinking about selling, downsizing, or staying put, my contact information is in the description. Reach out. I'm happy to talk through it with you. Thanks again for watching, and I'll see you in the next video.